Okay, so for this strategy, you're going to have to use at least one higher time frame. Just going to mark out a 4-hour fair value gap. That's all we're using the higher time frame for. If you look here, we look at this wick here. The moment it comes in, it instantly reverses. We want to look at the first fair value gap that forms, right? The first bullish fair value gap that forms. If we mark out this first fair value gap here, that's going to be our entry, right? That's going to be our entry. So this is the fair value gap. Let's this does, and this is what's so important about the model is, let's move that there. We've got the 4-hour chart, which is our higher time frame. We have price respecting it because we wick into it. It moves off in the opposite direction, and it leaves a fair value gap. So any entry on this lower time frame fair value gap is very, very high probability, right? It's very like that, right? So what you want to do now is we want to enter on this 1 minute fair value gap, right? And at this point all the way up here, right, if you get on the charts, you want to wait for the retracement to this fair value gap. So what that would look like is you'd set up your limit order at this fair value gap. Now your stop loss, this is dependent on the trader. The safe stop loss is at this wick low, right? Because this wick forms the fair value gap. Safe stop loss, right? You don't need it all the way down here. I would never say, and I always say to my students, don't have your stop loss really tight, because you see this wick here. This is exactly what so many students do, right? They get everything right about the model. Let's just zoom out. They get everything right about the model. So price comes in, it shows respect, it moves off massively, it comes to their fair value gap, but because they have such a tight stop loss, they get wicked out, only to see price go straight to their take profit. So don't be that guy. That used to be me. Don't be that guy, right? A 2 risk to reward ratio and a 50% win rate can make you a millionaire, right? You don't need perfection in these markets. You just need consistency. So for your stop loss, I would put it at this low here, right? This low right here. And we get a 2 risk to reward ratio pretty comfortably. If you aim for a 3 risk to reward ratio, you just miss out on it, right? You just miss out on it, which is realistic in trading, right? Every single trade, you're not going to hit a 3 risk to reward ratio or higher. Sometimes it's going to reverse on you. Sometimes you'll get 2 risk to reward ratio. Realistic trading, right? Here we are on the 1 minute chart, and if you remember, this is the 4-hour fair value gap. And if you remember what I just said before, what we wanted to see is we wanted to see price hit the 4-hour fair value gap, quickly move off, and then enter on some sort of retracement here, right? Ideally on a fair value gap, and then we want to ride price up, right? That is what we want to do, and that's what the logic of this trade is. And if we just remove this blue line here, right? Just look at this, right? Look at the respect. This is exactly what I mean when I say respect. Do you see how price wicks in to this 4-hour fair value gap and then quickly and aggressively reverses, right? Look at this. We come all the way down. We just wick into this fair value gap. We just tap it. We move off in the opposite direction, little retracement, and then we continue off, right? So we want to enter on any sort of fair value gap here.